welcome my dear panelists, Ioana, who's the board member, co-founder, and advisor at CryptoUK. Welcome.
Thank you.
Then we have Brett, who's the Web3 Lead at Accenture. And Joy, AI Services Specialist, EMEA at Oracle. Okay, so hey everyone, my name is Julia. I'm recruiting team lead at BeInCrypto, which is one of the top 3 crypto medias in the world. And today we are diving deeper into the corporate world of blockchain. So within the last several years, we could have noticed how blockchain technologies have evolved into a versatile tool with applications for different industries, finance, supply chain, healthcare, and so on. So yeah, we'll be discussing it today. And yeah, my dear panelists, can you say a couple of words about yourself and your experience in the corporate Web3 world? And let's start with you.
Thank you. Glad to be here, everyone. I'm Ioana Surpateanu. I have what we call, and I call, portfolio career in crypto, meaning I advise mostly via sitting on the board of a variety of Web3 and crypto projects across the spectrum, starting with Web3 gaming, decentralized finance protocols, next-gen decentralized finance protocols, digital fashion, gamified NFT solutions, etc. Today, I am representing CryptoUK, where I sit on the board. CryptoUK is the largest pro-crypto trade body in the United Kingdom, and we have over 160 members with a variety of market caps. So we have Coinbase. Coinbase is one of our members, a couple of other very famous centralized exchanges. I'm not going to name all of them now, but also a smaller fringe, if you will, Web3 projects. In terms of my experience with corporate blockchain, actually I'm going to be the startup person on this panel, because aside from the members that I support at CryptoUK, I am involved in the startup world in crypto. But my background is in traditional finance. I used to head crypto at Citigroup about 3 years ago, and I did that for 4 years. So I do have a very good understanding of the corporate blockchain world. I do not believe that this is where most innovation lies ultimately, but I do believe that corporate blockchain implementation in its most advanced form, right? Not just a shared database with 3 nodes which all know one another. So corporate blockchain implementation in a more advanced form is something that we need if we want to achieve the ultimate innovation, which for me is a very clear fusion between decentralized finance and traditional finance, or between decentralized technologies and crypto and the more traditional environments, be it in finance or elsewhere. So like I said, I'm not a corporate blockchain person. I am very much a crypto degen. But I do believe that ultimately we will reach a convergence between these two, and I will elaborate on that later because I don't want to take too much of the time of my fellow panelists.
Brett?
Yeah. Hello. Hello. Okay. My name is Brett Hornung. I've been in Accenture's blockchain practice for the past 6.5 years. I currently look after Web3 for growth markets and a go-to-market function. My history in blockchain is everything from permission blockchains to public blockchains across many different industries. So come with a vast array of experience as it relates to the word blockchain. In my current job, I look after this region and how our clients can both understand what blockchain is, what the benefits are, what the risks are, but also form strategies around it, ultimately design blockchain solutions and applications, build and operate them for our clients. So do a number of different things across the space, and have been in it for quite some time.
Yeah.
Okay. Good afternoon, everyone. My name is Joy John. I'm from Oracle. I'm an AI and blockchain specialist. I work across the EMEA region. I'm based here, so a lot of my time is with the Middle East and Africa region. Well, clearly, I think Brett and myself are more from the corporate side of things, and we'll share our experiences. I'm sure we will pull in Ioana as well into this. But it's not a boring area, by the way, in enterprises. We're seeing a lot of innovative blockchain and Web3 implementations and potential in this region. In fact, I'm very happy that UAE, for example, is a pioneer in these technologies, right, in this region. So I'm really optimistic in seeing many, many implementations across here, and I'm really happy to be here personally in this area.
Okay, so thank you guys. Brett, let's start with you with the question. So Accenture has a global presence in the corporate world. So how do you see the role of corporate blockchain solutions as a strategy for revenue amplification?
Yeah, so when we talk about corporate blockchain, I think a few years ago it really meant like permission blockchain, right? I think as we've moved forward, corporate blockchain encompasses just blockchain. Doesn't matter on the technology choice or the network choice. It really matters around how our enterprises or how our corporates leveraging this technology to change their business. And so I think that you can break it down into 3 buckets. The first is B2B. That's really where corporate blockchain kind of started. Think your classic supply chain use cases, your interbank reconciliations, et cetera. Right? And these are still beneficial, and there are many enterprises, corporates, FIs, governments today that are building on permission networks because the data is on a need-to-know basis. And there is value in doing that, right? I think the one that's emerged over the past few years, especially on the non-financial side, is the B2C model, right? Historically, in crypto, Web3, blockchain, whatever you want to call it, the go-to-market or the public blockchain side was typically just the financial institutions playing around with money or securities, right? With the rise of NFTs, you started to see brands enter the space. A lot more loyalty, a lot more customer engagement, a lot more gaming type use cases. And so you're starting to see a new model of how do I interact with my consumers leveraging blockchain technology, whether that's through wallets, it's through ledgers, it's through nodes, it's through enterprise staking, whatever it might be, there are these new engagement mechanisms on the B2C side. And then for the more advanced enterprises, what we're starting to see is the B2B2C model, right? So as I develop my token strategy, as I build blockchain applications, platforms, use cases, I can start to leverage the CapEx that I've laid out to go to other businesses that might not have the appetite to invest, that might not have the risk appetite to go build these types of solutions and productize them. And I can start to take that to them as an offering itself, right? So now I'm starting to see a much larger picture to blockchain than what might be pigeonholed in different focus areas. And so as an enterprise, as a corporate, I need to think about that across my entire firm. What networks am I building? What products, what software am I purchasing? What is my overall blockchain strategy, and what are the synergies across those 3 different buckets? That way I can maximize the revenue, minimize the cost, and ultimately have a cohesive blockchain strategy.
Amazing, amazing. So, and how do you see different blockchain solutions influencing different industries? And what industries are specifically influenced by these solutions?
I think the beauty of blockchain is it really cuts cross industry. I think that in the loyalty space, you're seeing a lot more people, build on public blockchains or at least build hybrid models. In the money space, you're seeing on the CBDC side, right? You're seeing more permission blockchains that are coming out, but on, stable coins on public networks. So I think it really depends on the specific risk appetite of that corporate, if it's a corporate that's getting into the space. I don't think it's this network is for this or this network is for that. I think it's definitely, it varies based on the specific enterprise that's deploying the solution.
Okay, makes sense. So Ioana, from a regulatory perspective, how is...
I think it's...
okay. How is CryptoUK guiding the UK and Europe's approach to corporate blockchain integration?
I will answer the question, but before I have some comments on what Brett said, actually, I do agree with you partially. However, if we look at what's been emerging in the market very recently, so Citigroup, my former alma mater, my current alma mater as well, came out with a project about cash tokenization and trade finance. They've been working on it since I was there, okay, just to put things into perspective. It's very much a permission blockchain structure, right? It's innovative, correct? But my point is that I still believe that this is the predominant case, especially when it comes to traditional finance. Yes, across other industry segments, we see a hybrid model prevail more and more, but in finance, it's probably going to be like that for a very, very long time. Yes, we have JPM, they have this pilot, and they conducted DeFi trading with Aave on Ethereum. So we see bits and pieces, but because we're talking about a very regulated industry, I think the permission blockchain is the path forward still for a long time to come. And I agree with you, it's not the most optimal one, but it is what we have currently. And let's take it from there. And on the stablecoin side, because I am working on stablecoins quite a lot, you have both, right? You have, for instance, USDC operating on public chains, but also in much more privatized structures. Why? Because they want to engage there. They want to also be able to perform as a traditional financial market participant. So you have these two things. But I agree with what you're saying, and I liked the stratification. Now, going back to your question, I think it's important. I stated my goal on this panel to be the startup person, to insert the startup angle in this discussion. I think it's important to understand, and I second what Brett was saying earlier, that these are two different things. The way corporates think of innovation and the way startups think of innovation, be it blockchain or emerging tech or any other field, right? For corporations, it's mostly about optimization, cost reduction, time reduction, optimization across the board. And another thing that I would add when it comes to corporation, if we hear about a corporation, you know that better than me because you work with your clients, innovating, it doesn't mean that the innovation happens across the board. It's usually one more risk-prone segment within that corporation that takes the lead and implements something, and then the ideal the ideal outcome is that it will permeate across the board in the corporation. But it's very, very rarely that you have the corporation itself as an entity innovating across the board, right? So this is the corporate blockchain side where everything is driven by optimization and optimizing the relationship with clients and making sure that they still want to use you for whatever service you provide. On the startup side, it's a completely different dynamic. We're talking about innovation, risk, proneness, tendency to take a lot of risk, tendency to innovate, test. And we see that primarily in crypto, which is what fascinates me about this industry. So there we have almost two clashing ethoses, but as everyone who works in the industry, my mental model is that ultimately we will have that combination that I mentioned before between traditional finance and decentralized finance, or traditional technologies and decentralized technologies. And in order to get there, we are on the projection or the trajectory to implement this technology as it goes. So Web3, crypto, we're using these terminologies interchangeably. They don't necessarily mean the same thing, but for me, crypto is the alternative financial system for the internet economy. And what's different about Web3 and why I like it is the fact that it empowers the individual. For the first time, we have a data portability layer, the ability for a user to transport his or hers social graph directly into the technology, directly operationally onto the internet. Users can own and participate in the governance of the internet, and that's not possible with Web 2 or more traditional environments. So this is what fascinates me about Web 3, and ultimately the financial system for Web 3 is crypto, because you need something that works 24/7, 365, right? And that's in contradiction with what happens in the corporate world. However, if in the future, I don't know how familiar you are with crypto, or if you're retail traders or institutional investors, etc., but what crypto has generated is this quest for yield. Everyone wants to make money, right? We've seen farming, yield generating in DeFi, mostly driven by retail investors. Now, because of the market, macro market conditions, it's, well, counterintuitively more profitable to use traditional financial instruments to get more yield, right? So it's easier to invest in money market funds or treasury bills, and you get a lot more yield than you currently do in DeFi. So what that has prompted is a move towards, we've heard about tokenization probably before, you've heard it, and real world assets mentioned in the presentations before. This has generated this mass movement towards bringing traditional financial instruments on chain. Why? Because the revenue is better, the yield is higher, and then putting them on chain makes it more accessible to everyone. So the future, and that's where I go back to that convergence path, is us as retail users being able to access traditional financial instruments and getting yield as much as we want to via blockchain infrastructure. That presupposes very tight collaboration with corporates, be it on the finance side or non-finance side. And getting there presupposes many, many layers of emerging tech and blockchain implementations in those corporations in order to open up the mentality, in order to open up that corporate ability to understand that innovation can be implemented. So here I am, I found this convergence path, but like I said, I don't think corporate blockchain in any of its implementations is the actual ultimate innovation path or point. I do think that building the correct infrastructure and the correct environment for more innovative crypto and Web3 projects to interact with corporates is. And current blockchain implementation in corporates is the right path towards that transition. And let's see in a year from now if my predictions are correct.
Amazing. Thanks a lot for, yeah, and it's cool how you found this, this path and the connection with startups and in the corporate world, how it's all working together. And now coming back to enterprises. So Joy, as a technology infrastructure and platform company, how do you see the relevance of Web3 and blockchain in the enterprise world?
Okay. So we've had some interesting discussions on the crypto side. Well, actually, I should admit, and I'm sure every one of you sitting here got into the blockchain world through the awareness from crypto, right? Probably Bitcoins or whatever it is. And that's where we've started slowly getting into blockchain, right? And no different from me. I'm from Oracle. I'm specifically into corporate projects, but still, I got my introduction into blockchain through Bitcoins, for example. And then, so we've had this scenario. In fact, we have a platform running on Hyperledger Fabric from Oracle. And interestingly, I started meeting customers, right? And this is serious stuff where we need to see how this fits into their requirements. And more, I was seeing that it's moving not just a hype, but actually enterprises were looking for something like this. Now, I will be lying if I told you that every enterprise I spoke to blockchain and who were very excited went ahead and implemented it. No, because there's quite a few challenges in there, and that's something that I've seen in terms of the traditional technologies, right? Now you can actually go ahead and implement an ERP. You can go ahead and implement an HR system. But with blockchain, you really need to find a use case that makes sense to you. And more often than not, it spans across enterprises when you're talking about a blockchain network, right? And what we've seen is that when there is a synergy, when there is an agreement between enterprises, that has been done. And one of the biggest points with regard to blockchain in enterprises was not on the crypto side, but it was more from the governance side and the value that these enterprises got by implementing blockchain. And there are multiple scenarios, right? I have been involved in FSI scenarios, financial scenarios, for example, cross-border payment. I was involved in banks who are doing eKYC using blockchain. I was involved with a university where they were verifying the graduation certificates on blockchain. In fact, I'm actually working with a public sector entity here where they're actually sharing secure data over blockchain. Now, we all know the value what blockchain brings to the table, but more importantly, I think it is to be thought through in terms of how it benefits the organization. Are you really getting value in terms of time and money, and most importantly, ensuring that the core concepts of blockchain are maintained when you do a project like tamper-free, getting rid of intermediaries and such. But I think coming back to the point, we are seeing a lot of interest in enterprises. Of course, it has definitely flattened, I should admit, that there has been much more interest, and probably that has got to do with the growth of cryptocurrencies for that matter, right? So, and both of them kind of, I would say, go together, because at the end of the day, when there is an interest, and also, especially from an enterprise side, when big organizations, big corporates actually put their bets on blockchain and Web3, right? So we've seen the metaverse story. We've seen that fluctuating. But I think the key thing is when you really see projects take off, such as the CBDC, central bank digital currency, and such, and where you're actually seeing there's a great value, things will fall in place. And I'm definitely looking forward to seeing a lot of enterprise innovations that's happening in blockchain. Personally, because I have been involved in these projects, I've seen many of these projects go live.
Sorry, I have to comment because I've heard CBDCs mentioned 2 times already. CBDCs on the retail side do not exist yet. Okay, I don't think they will exist until at least 6, 7, 8 years. Wholesale side, yes, there are some pilots around wholesale CBDCs and settlement use cases, but retail CBDCs, the CBDC that scares you the most, the one where the government will know everything that you do, well, maybe potentially in China, we might argue that it exists. Aside from that, we're a very long time away. Yes, regulators and central banks were scared about Libra. That's how it initially started, right? The idea that a private entity can issue money. And we came with a compromise solution, which actually works great for crypto, which is a stable coin, right? You tokenize cash. It's tokenization of cash deposits, and it works. But CBDCs don't exist yet, and hopefully in the current design format, they won't in the near future.
We'll see in
on
1
the
or
retail
2
side.
years from now.
Yeah, we'll see. We'll see.
Okay, Ioana, thanks a lot for your comments. And yeah, I hope you got some insights how blockchain solutions are helping the companies and shaping the industries. And also from Ioana, you got some insights about the regulatory approach and regulatory things, how they are running this industry. So yeah, if you have some questions, like 1 or 2 questions from the audience, we can take it. Go ahead. Can we have the mic?
Hey everyone, thank you so much for your insights. My name is Mina. So actually you discussed 2 important topics about the value versus also that everyone want to make money from crypto and so on, especially Ioana. So I want to know how startups can effectively manage between, okay, let's build the hype and make more money, let people invest in the startup or invest in our token, or let's bring value, and by mass adoption, they are going to use our service or our approach, and then they are going to make money eventually. Because I'm asking this question because I saw a lot of startups right now, they're building the token just to, I don't know, run a pre-sale or raise some money, and people invest and they can make money through crypto. And then they try to find the value, or they try to find what's the use case that we're serving.
Okay, so 2 things. When I said people like making money, I didn't mean in crypto. I meant across the board. And the example I gave, thank you for the question, first of all. And the example I gave was actually about making money from traditional financial instruments like money market funds and treasury bills and all sorts of other traditional financial instruments that retail traders and retail investors can access via a broker in the current financial world, in the traditional financial world. In crypto, the broker is cut out and you have access to all sorts of instruments to make, well, that will generate more yield. That's what I said. But I didn't mean it as a specific thing to crypto. What I meant was that crypto has opened up this appetite for retail investors in terms of taking more risk, which at the end of the day, risk is what drives economic growth. So let's not shy away from taking risk. It's actually extremely important for the economic and societal growth. And so, yeah, crypto has opened the appetite for the retail investors to engage in these activities, but also to learn more about finance. And to me, this is ultimately, we can talk about various types of values that various types of crypto and Web3 projects generate, but to me, ultimately, is about making people learn about finance. Before crypto, you didn't hear anyone, especially who's 17, 18, 19, talk about how the central bank issues money, how fiat money works, all these sorts of things. So aside from generating that appetite to be less risk averse, it has also stimulated people to learn more about finance and other parts of the economy. And I think this is crypto's greatest value in terms of how do you balance understanding if a project is just hype or if it actually generates more value, again, through education, through learning about how these things work, through understanding the ecosystem. And yes, there will be scammers in crypto. That's unfortunately something that we have to deal with because it's an incipient industry. We're not really that mature, but we're putting everything in place, including on the regulatory front, which I didn't really discuss that much, but we're putting everything in place to prevent those people from gaining traction. And I think as the industry matures, we will have less and less of those. But ultimately, my answer to your question in the most simplistic way is learn about things. People, we tend to underestimate people. People are smart. If you start looking at something, you will determine whether it's a scam or not, ultimately, right? It becomes more complex if we think about FTX and Alameda. But if you progressively learn, then it's less likely to be involved in something that is just hype with no substance. And yeah, we'll take it from there. Again, education is the most relevant part. Regulation seconds it, or I guess complements it. But yeah, people wanting to make money, it's not a crypto phenomenon. On the contrary, to the contrary, it's pervasive. I hope that answers your question.
Yeah, thank you. Thank you.
Okay, amazing. So yeah, thank you a lot for your attention and being with us discussing this topic. Thank you, guys.
Thank you.
Thank you, everyone.
Thank you, Julia, and our panel.